Joining us now, Louis Kaufman, portfolio manager at Thornburg Developing World Fund. Louis, thanks for joining us. Let me just right off the bat ask you about the effect of the disaster in Japan and the ongoing unrest in the Middle East on emerging markets. I mean, do you think it's created a buying opportunity here?
Well, first, let me say that our hearts go out to the people in Japan, and it's a terrible tragedy that's occurred. In terms of direct exposure in the Thornburg Developing World Fund, by mandate, we don't actually have any exposure to Japan, and even indirectly, our fund, by and large, has focused on domestic demand. So countries like Brazil actually only have about 10% of their economy tied to exports in general, and for a country like South Korea, for example, which we don't have any representation in the Developing World Fund, that number might be more like 40%. So as far as Japan goes, we feel like we're in relatively good stead.
Louis, why is that your strategy?
Domestic demand is a place where you're going to have some of the best growth prospects on a longer-term basis. And that's actually a really good question, because if you look at 2011 as a whole, it's really a year that's been dominated by inflation expectations. And you can see that in the disparity in performance between high inflation markets and low inflation markets. So India is a market with amongst the highest GDP growth in the world, and that market is actually down 13% year-to-date in dollar terms. Contrast that to a market like the Czech Republic, where the growth outlook is a lot lower, and the market's actually up 9% year-to-date in dollar terms. So we focus on domestic demand because that's where a lot of the best growth prospects are on a longer-term basis.
You know, Louis, when Matt and I had you on last time, one of the things we loved is kind of the specific stock picks that you like. We didn't have a lot of time to get to them, but let's get to them because you do have a good performance, names that aren't certainly household names here in the U.S., but let's talk about them. One is a cement producer in Indonesia. Talk about this company, why you like it.
Sure, and let me just briefly say that all of the names that I'm going to talk about are names that have really been hurt by real or perceived exposure to high inflation expectations, and we actually think at Thornburg that is one of the areas that offers the best buying opportunities. So Indocement is one of the large cement producers in Indonesia, one of the top 3 cement producers. And Indonesia, not necessarily a country that you think about when you think about the best economic outlooks in emerging Asia, but actually it's got very low government debt to GDP levels, a balanced budget, a current account surplus, much better macroeconomic fundamentals than a lot of other countries in emerging Asia. So that's important for a couple of reasons. One, it's not an economy that has a government debt-fueled economic growth. In fact, it's much more of a domestic demand, sustainable GDP growth type story. Second, because of those strong macroeconomic fundamentals, it's good for the currency, which means it's going to be able to weather through these inflationary expectations in Indonesian rupiah terms. Now, as far as the company-specific fundamentals go, this is a company where the top 3 producers in Indonesia control 90% of the cement market. That's important because of pricing power. So to the extent that you see higher coal prices, higher energy prices, what have you, they should have the wherewithal to raise prices and protect profits. And one other thing that's important about Indocement, like all companies in the Thornburg Developing World Fund, or virtually all of them, is it is a free cash flow generative company that's not going to have to go to the capital markets in a period of duress to raise capital. And so we think that should be good for shareholders over a reasonable time frame.
We saw the benefits to U.S. companies that were in that position here during the crisis. Let me just quickly ask about these companies. I mean, that looked like it from the chart. It was priced in rupees. How do you play these stocks?
I think the best thing you can do is buy them when they're out of favor. That's something we try to do.
No, but I mean, as a U.S. investor, do you buy ADRs or do you go straight to India?
In this particular case, we would go straight to Indonesia and access the local liquidity.
Indonesia, excuse me. Let's talk about a Peruvian bank here, Credicorp BAP. Why do you like that?
Again, another economy that's really suffered from inflationary expectations in the emerging market. But the thing about Peru that's interesting is when you think about the different economies in South America, Peru might not be the first that comes to mind, but it's actually got higher GDP growth than Brazil, maybe a 6% expectation for 2011 versus maybe 4.5 for Brazil, and it's got lower inflation, maybe a 2% inflation outlook versus 4 to 5% in Brazil. Now, the other thing that's interesting about Credicorp is, and this is interesting in a banking context, is again, you think about the robust economic outlook in Brazil on a long-term basis. Consumer credit penetration in Peru is only 5%. That compares to 17% in Brazil. And one last thing that I would mention about Credicorp is, we get to this discussion about inflationary pressures and pricing power. Like Indocement that I mentioned in Indonesia, Credicorp is a bank that controls. It's one of 3 banks that control. One of 5 banks that control about 90% of the market in Peru, and that's almost unheard of in a global banking context. 50 would be high. 55% would be high. The reason that's important is to the extent that you see increasing deposit costs because of higher inflation and higher interest rates, this is a bank that should have the pricing power to actually raise loan rates and protect net interest margins and grow through the crisis. So Credicorp is a bank we like.
All right, Louis. I was going to thank you. Carol wants to thank you. We both want to thank you. We don't want to step on each other here. No, we appreciate you spending some time with us today and talking about that very interesting stuff.